Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, March 5th, 2009. Well, another ugly day on Wall Street, folks, and it just cannot be seen that the market can put more than one back-to-back up day together. I mean, it's just not happening. You're not seeing two up days. You're just seeing one bounce maybe every week or so, and then the market gets crushed right back down. Now, I'm going to show you my trend lines because the beauty of this trend line, you're seeing an actual bounce happen right now off my lower support line. And if we had broken this one, I would have been extremely worried. It could have been a big down day in the market. But as of now, the market seems to have hit this lower trend line, and I want to show you this one. These are all your key trend lines you need to know for the day. Virtually, I'd have to go hunting and actually do a lot of calculations to find what's below this one. Ultimately, I would think the NASDAQ hitting the November lows would be the next spot to look for a bounce in the market. Let me just switch to that NASDAQ chart here quickly, in fact, just to show you on the daily chart. This level right here, this is what my next level, if we broke that on the SPY chart, which is what I was just showing you, this would be the next spot, right down here. All right, which is not that far away. On the NASDAQ, it's about 20 points, but that would be the next spot I'd be looking for. Right now, we're looking at the SPY intraday, though, and I'll flip back to that. And this level, just to show you how I got this, you virtually are going back towards the high here. All right, right here, you take the high from the 3rd, March 3rd, connect it to the low, the pivot low on the 4th, and just write down, and sure enough, where does that line coincide with? The lows of the day. Now, a lot of these other levels are extremely key. Look at what happened today, and this is a beauty. And in fact, I don't even need these lines right now. Only if we start to rally do I need these upper lines. All right, so I'm going to take them out so we aren't too confused by what's going on here. And now what you're seeing here, folks, is, again, this trend line, this lower trend line turned out to be extremely key for the market today. Taking the low, connecting it to the secondary low, to the 3rd secondary low, which was the close of the day, and just draw that all the way up, and look at where that angle comes to. All right, it comes right into where we gapped. We gapped lower and moved right up into that. And this is where it was an obvious situation, in my book anyways, and a very obvious situation that if we didn't break above this and close above and confirm it, we were going to get slaughtered in this market. Now, why? And this is very key for those that are into trend line analysis, which, by the way, guys, is such an exact art. So few people, so few traders out there know this stuff, know to do this. People wonder why the market moved up in this level and then went sideways with all these tails. I can tell you. I mean, this is what this stuff does. And that's why, it's so imperative. I always do a little promo for our Premium Center and our elite subscribers that subscribe to it. $49.99 a month is very inexpensive to learn this stuff. Educational videos, picks, you name it, it's in there on our Research Center, part of InTheMoneyStocks.com. Now, what you're seeing here, guys, again, look at this. Look at these pierces. All right, what's that telling you? As you have this trend line and then you take your low trend line from right here, extend it right over, you have double resistance points, and every time the market goes up to here, because the market was trading up in each of these candles above this line, but every time it closes right back on that level, can't break out. And again, that's telling you that the market's trying to break out, but sellers are coming in, and this resistance level continues to hold. As soon as you get at least 3 of these that are failing, if you can't break it on the 4th, you're going to go lower, and you're going to go lower bad. That's a high probability trade when you fail that many times to break out, and then you know what's going to happen? You're going to get slaughtered to the downside. The same thing happens on the upside. If you start seeing a lot of tails piercing the downside, and every time they're rallying the market back above that level, more often than not, you're going to see a rally back to the upside, which is going to be pretty significant. So it works both ways, and that's the beauty of this. You have trend line to the downside that's getting pierced multiple times, and they're saving it. The market's looking for a rally mode position. If it's on the upside, like it is here, candles, these are, I mean, essentially these are topping candles, but it's not really a topping tail because you like to see topping tails at the top of the chart up here, not on the lower end of the chart on the gap up, gap down. So in any case, what you're seeing here is the attempted rally, and every time it's getting failed. And every time it fails, if I'm a trader buying this market, which I wasn't obviously, but if I was here, what I'm saying is, oh man, this is just wearing me down. I can't hold out very much longer. I'll buy it a little more, and if it fails there, I'm throwing in the towel. And that's the mentality. That's the psychological aspect of traders here. And before you know it, the market fails, and look at the move down. Sell, sell, sell. Next candle sells to this support line, bounces, and closes up. That's why you have to have all your support lines. Where do I get this one? Take the low pivot right here and just draw it right across. This is this gap fill area, which, by the way, look at the opening candle. This is very interesting. This is a gap, right? You have a gap in the chart. We know there's a tendency for these gaps to fill. Well, look at what happens. You gap lower, you touch that lower point, filling that gap, and then you bounce. Where do you go? To the secondary resistance line. Trade sideways, try to break out, fail. Where do you go? Right back to that support, bounce, bounce, and then finally break lower on this candle. All right, and a good move down here, folks. Ultimately breaking and pausing on each of these support lines, and then ultimately you getting a dump out. This was a big candle to the downside. Volume was actually pretty heavy in this candle. Then you finally come to this lower resistance, and remember, I just showed you where you got that from. All right, again, high to pivot low before the rally up. Just extend it right down. Connect the dots. It's really a connect the dots. Those of you that played that when you were younger, connect the dots. Very similar to this. All right, and again, it's a fine art that not a lot of people do, and that's why it works. When you have a technical aspect, or when you use a fundamental aspect that everyone else uses, it almost never works. That's why you'll see trend lines go through key levels so easily, because everyone's using them, everyone's buying them. So you know what? The trend line will get broken, at least in the near term, pierced, and then you all of a sudden see it react, and everyone's like, oh, well, the trend line worked. Not necessarily. Oftentimes, you have a key trend line analysis line in there that it actually pierces the moving average and goes right to. Good example of that, I guess, would be these lines here. Take this line right here. Let me show you this. All right, there you go. Boom. So a good example of this, why it pierces. Because look, here you pierce double moving average, and where's the actual tip to that point? Where's the actual pierce? Look at the 20 moving average right here. You pierce this level right to this level, and then you bounce. So everyone's like, all right, well, the 20 held. Well, in technical sense, yes, I guess you could say that, but if you're an entry, and we all know entry is everything, all right? I'll be the first to admit it. If you don't have good entries, you're going to lose, all right? 10 zillion people can buy BAC on a day when it moves $1 each way at different levels. Half will make money, half won't. Just the way it works, all right? The market's like that, so you have to know your entry. Entry is everything, and that's why trendline analysis is obviously so key. And look at this. Look at the sell-off yesterday, piercing the 20. Where does it go? The tip goes right to that line. I mean, this is just the kind of stuff that you need to be aware of. Any trader that's not aware of it is just playing with, you know, the house's money and looking to lose it and give it right back to the house. I mean, that's essentially what you're going to do. You're going to be getting some coins from the house, and you got to play them until you lose them, essentially. In any case, you're watching the live charts right around midday right now. The market's starting to sell again. This line will be support. This line breaks. I'm going to have to do some big-time calculations below, but as of now, let's look for support to maintain itself here. And again, we'll watch. Do we get a close below? If you close below this line, you look for it to recapture on the next candle, or you watch for confirmation on the downside. NASDAQ right now is getting absolutely demolished, down about 40 points. All right, so the NASDAQ getting hammered. You're only about 15, 20 points away from that low. Dow down 220 now. The S&P down almost 26. And again, NASDAQ is down almost 41. So the market's getting hammered again here. You got a little bit of a bounce off this support line, but now you're retesting it. Now you're watching again, guys. Does this double bottom hold? If this holds, do we close above this trend line? If we close above this trend line, do we move back up above this line and maybe retest this line right here at approximately 69.65. If we break that, then we get above $70 on the SPY. 70 is a very key level intraday. If you can reestablish that level, you may have some more upside. If you close below 70, you got to be extremely cautious. All right, so again, watch this lower level. Again, if we close below, do we confirm it? Right now, look at the tail forming. You're getting a little bit of a bounce back above. That's telling you this line is extremely good support, and it's trying to hold. Doesn't mean it's going to hold. It's trying, though, and that's the important thing here, guys. The important thing is to know your trend lines, know your trend line analysis, know your pattern, price, and timing, which is all stuff we cover in the Premium Subscriber Research Center. And from there, break it out, get to a better sense of yourself, understanding the markets, and start to make money. I mean, become an elite trader, become an elite investor. You know, become the investors that aren't getting their head handed to them in this market. That's essentially what you want to do. Okay, 60-minute chart, guys. I already drew this in a little while ago. This is your area we went to yesterday. This is another great example why you have to know your trend lines, why you have to know your price pattern and timing. Because into the close, into 330, what did we do? Gap window resistance right there. Look at how perfect it is. What happens? Sell off. What happens? Sell off, sell off, sell off, breaking the lows. Now you broke the double bottom lows. That's not good. I'd like to recapture that by the end of the day for any possibility of upside in the coming days. If we can recapture that on the 60-minute, I'd look for a move to the 20 moving average right here. All right, this 20 moving average is sloping down, so I mean it's going to continue to slope down. Ultimately, there's, you know, the question becomes, you have to draw on your trend lines and try to find the next level on this market. All right, I can do that, but I'm not going to do that. I'll do that in tonight's Research Center video. Give everyone, the premium subscribers, the elite treatment, obviously, as they deserve, and cover all the daily analysis stuff. We'll look at gold, oil, the dollar, how's that all affecting, what's causing the market to sell off today so dramatically again, and talk a little bit more about psychology. Psychology's all at play. All right, have a wonderful day, guys. We will talk to you tomorrow in the intraday video as well. Take care.